Welcome and thanks for joining. Over the next 6 or 7 minutes, I'm going to be going over state general obligation bonds, and I'll try to make this worth all your time. First, let's put the size of this market in context. U.S. GDP is about 17 trillion. The bond markets are about 40. Equities are about 20. Municipal income is about 3.7. We're specifically talking about state general obligation bonds, and that's about a $500 billion market. So what are state GO bonds? First, we're talking about municipal income, municipal debt issued by states. We're excluding cities, counties, power districts, sewer districts, and airports, and there are many others. And we're talking about general obligation bonds, not revenue bonds. So a couple examples of revenue bonds would be like a toll road or an airport. The revenues from those projects support the bonds. For general obligation bonds, they are supported by the full faith and credit of the issuing entity, and their revenues are generally coming through taxes. So state GO bonds are generally very highly rated. A couple reasons for that. They're issued in a federal context, so the federal government provides a lot of support for the states. They provide military defense, cover some health care costs, some disaster relief, and they can provide stimulus during recessions. Also, the states, another reason they're highly rated for GO bonds, is the states can increase taxes if they need to increase their revenues to pay off their debt service. So last state GO bond to default was during the Great Depression. One state defaulted temporarily. Before that, you have to go back to the Panic of 1837. So defaults are extremely rare. Next, so where's the demand for these types of securities? This type of security. So they have a few unique characteristics. They're generally tax-free at the federal level and often tax-free at the state level. They have very low default rates, as I just mentioned, and they also have very low volatility. All right, so let's jump into how the quality of this type of bond is assessed. We're going to use Moody's methodology. They have 4 main categories, and this will kind of give you a lot of the nuts and bolts about what's looked at for the quality of a state GO bond. First, you want to look at economy and per capita income. So if the populace is making more money, that would generally put the state in a better financial condition. Second is industrial diversity. With a more diverse industrial base, the state's better equipped to be able to weather a recession. Following 2001 recession, manufacturing suffered. Following 2008-2009, financial services suffered. So there's a pretty clear correlation there. And then finally, you want to look at employment volatility. So if employment suffers during a recession, you're going to see a big drop in personal income taxes as well as a lot of sales taxes. So let's jump to our second topic, and that is governance. So you want to look at leadership's ability and willingness to make difficult decisions, to make politically unpopular decisions if the state happens to be wasting money or overpaying certain employees and the like. You also want to look at legal requirements, whether it's required for the state to pass a balanced budget every year. You want to also look at how that budget is tracked through the year. How quickly can adjustments be made? If there's a strong executive branch in the government, they can make quicker adjustments than if legislative action is required or even a supermajority legislative vote. And in voter initiative states, that's the slowest reaction out there, where public votes are required for certain actions to get the fiscal house in order. So also under governance, we have constitutional constraints. Sometimes there are limits on tax raising. There's a ceiling on certain taxes. That would be a constraint. There are also maybe cases where certain expenses are prioritized over debt service. That's another constraint that would be considered a weakness for a state's GO bonds. Next main category is finances. So revenues. You want to look at revenue diversity, volatility, and growth. So a diverse revenue base would include property taxes, corporate income tax, personal income tax, gas tax, sales tax. There's a lot of taxes. So the more diverse that revenue base is, the better that state would be situated to weather a recession. And also a more diverse revenue base tends to track the pace of GDP growth more closely. Also under finances, we have the cash balance. You want to look at the cash balance through an accrual accounting measure because a cash accounting measure would be distorted or misleading if the state's been delaying some payments. Now, for the next category under finances, liquidity, you want to use a cash accounting measure for that. Our final category is debts. You want to look at the total amount of debt outstanding, the debt service cost per year. And you also want to look at the state of the pension, whether it's partially unfunded, the size of the contributions that are being made, and the assumptions that are under those calculations for the funded status of the pension. Where do you want to go for further research? I recommend reading a lot of the Moody's resources. You can read their full methodology. Read some of the ratings reports, which will give you some rationale for the ratings. They'll also provide listed actions that states could take to upgrade their rating, or they would downgrade, or even events that could occur that could downgrade the state. S&P, Standard & Poor's, also has a very similar resource for that. They have a methodology and ratings as well that you can refer to. I also recommend looking at some companies' research reports. They'll call it like an economic outlook or whatever they tend to call it. Generally that's going to be like a quarterly or a monthly or a weekly type of report, and you can get a lot of information on the municipal income market, some of the supply and demand factors that are very relevant that affect prices and yields. And other than that, I would just, your typical research sources like Google and your news resources are great for this. So that pretty much, that's a wrap, and thanks for watching. Appreciate your time.